My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other one of my friends, I'm just trying to save you some money. My job is not just to entertain, but to educate, teach, put it in context. Call me at 1-800-743-CNBC or tweet me at Jim Cramer. Why is it just so darn hard in this market to make money? After a rough day where the Dow tumbled 314 points, S&P plunged 1.56%, and the NASDAQ plummeted 1.67%, I think the problem's simple. The list of stocks that are working seems to grow smaller by the day. Isn't that what it feels like? We have fewer stocks that are safe to own and more that are downright toxic, as we saw near the end of the day when the bears crushed the bulls in toward anti-China fueled trading. Today felt like a vicious pro football game where the quarterback was under pressure all day and succumbed in the fourth quarter. In football, a quarterback tries to do what's called a check down, looking among his receivers for the best opportunity downfield. Sometimes the wide receivers are wide open and a touchdown is in the offing. Sometimes a QB has to thread the needle to hit a receiver, a slant pattern. Other times, though, times like today, the Bears are swarming, and it's like a jailbreak as they head toward the quarterback. If he doesn't get rid of the ball in time, well, he's likely to be sacked, perhaps for a big loss or a fumble or even an interception that could result in a touchdown for the other side. We used to have all these receivers who were wide open in this market. Increasingly, they're being covered closely, no separation. Sometimes it feels like there's no one left to throw the ball to, and you're going to have to throw the ball away or perhaps just absorb the hit. Today, the Bears went helmet to helmet, and the investors got concussed into the close. Not reassuring. Could be out for many weeks. Maybe come back soon. I don't know. There's a protocol. What does that look like in stock market terms for today's trading? Okay, last night, right on the eve of the big trade talks with China, well, we got, yes, some hopeful comments from the president. Just like you expect. Aren't you used to that? This time we got an interview where Trump said lots of positive things about what might happen if the negotiations go well. Hey, for a moment, it looked like we were going to get the green light to buy some companies' major China exposure. I saw receivers that were wide open. For a moment, it looked like you might be able to hit the best wide receiver, get a TD. Then completely out of nowhere, the Commerce Department steps in with a list of 28 Chinese enterprises that it doesn't want American companies doing business with. According to Wilbur Ross, the Commerce Secretary, these companies are complicit in, and I quote, the brutal suppression of minorities in China. Then this very afternoon, the White House slapped visa bans on the Chinese officials who were responsible for orchestrating these same human rights abuses. It's hard to argue with that, but the timing couldn't have been worse, especially during was right when Fed Chief Powell was kind of doing what the president was hoping to do, talking about how he's going to protect us. No wonder the market fell apart into the close. The offensive line broke down, and the QB, you, the investor, was totally gang-tackled. Unless, that is, you listened to us when we said the talks would not go well, and you shouldn't hold your breath waiting for a deal. While these particular Chinese companies that we have accused of aiding repression are not all that well known, the analysts were quick to suggest, for instance, that this move could hurt the likes of Intel and NVIDIA. Both of these stocks have been working of late. Today, they got slammed. We know the Trump administration is eager to limit China's access to facial recognition technology that helps the Communist Party identify enemies of the state. Unfortunately, the company that's identified with that technology is none other than NVIDIA. NVIDIA's stock have been climbing relentlessly thanks to strong demand for its graphics and data center chips. Plus, there was a widespread belief that the Chinese regulators might finally give the thumbs up for it to buy Mellanox, a terrific Israeli networking technology play. Something that seems a lot less likely. If you threw the ball to NVIDIA, you got picked off. And that's just the tip of the iceberg. The other day, the general manager of the NBA Houston Rockets got hit by like a bout of conscience. And he tweeted his support for the protesters in Hong Kong. The problem? American basketball is huge in China. They love the Rockets. But the Chinese government absolutely hates any sort of criticism, let alone support for its enemies. The reaction was, oh, but it's not a democracy? The reaction was swift. Even though many team owners sided with the People's Republic for business reasons, Craven, the NBA commissioner, Adam Silver, expected support for free speech. Now, look, there's no way that made Beijing happy, right? I mean, a commissioner coming out and saying things that, like Jefferson and Washington believed in. Is there really any room for that in a society of ka-ching, ka-ching? Why does this matter? Because if China feels like it's under attack from high-profile American businesses, well, they're more likely to start boycotting our biggest brands. Maybe they go after Nike or Starbucks or even Apple. These stocks have been very attractive here, but if boycotts are on the table, they suddenly got a lot less enticing. They're too dangerous for the moment to throw to. But it's not just the trade war. Let's say you decide to stay domestic to protect yourself, especially since Fed Chairman Jay Powell seemed to indicate that he favors additional types of easing. Of course, that's what happened right when the president put the kibosh. Normally, that would cut towards the retailers, right? However, if the trade talks are going to be stalled by this latest move from Commerce, that means we're almost certainly getting the previously scheduled bump up in tariffs in a week. It's hard to imagine anyone wanting to buy a retail stock in the face of higher tariffs, unless maybe it's a chain big enough to offset the damage. Target, Walmart, Costco. Too bad Target and Walmart rallied today while Costco is barely down. As for everyone else in the retail cohort, they don't have the scale to strong-arm their suppliers into eating the cost of those new import duties. Bad news. Healthcare? Well, you'd think it'd be immune to China, right? The strongest part of the healthcare cohort of late has been the medical device makers. But this very morning, we got this shocking negative pre-announcement from an outfit called Qiagen. It's Qiagen, a diagnostics company, a good one that tends to be pretty reliable. Shortfall was, of course, in their Chinese business. These medical device makers weren't supposed to have any economic sensitivity. Maybe that's not true anymore. As for the drug stocks and the HMOs, well, they really are immune to the gyrations of the Chinese economy or ours, but that doesn't matter. Doesn't matter right now, because these companies are smack in the crosshairs of none other than Democratic leader, Senator Elizabeth Warren. What about tech companies with zero China exposure? More Warren worries. She wants to break up big tech, so the stocks get hammered whenever she makes a stump speech condemning corporate concentration. I think people overreact to this stuff. Something like Alphabet with its search, Waymo, healthcare, cloud services, to YouTube, well, it might be worth even more if we're broken up. Market disagrees with me. Well-covered receivers. How about potential bargains? The railroads have been down relentlessly, right? I mean, that seems to be a...
All aboard!
Wait a second. They may not bounce back at all. I mean, they got the seemingly endless strike at GM. Autos are a major cargo for the rails, and that cargo is going to be lousy this quarter. What else? Banks? Right on the verge of reporting earnings. But with this yield curve, they could be dangerous. Aerospace? Not unless you know something about that Boeing 737 MAX woes that I don't know. There's a lot of totally well-covered receivers. Frankly, it doesn't leave too many stocks that are safe to own at the moment. You can take a shot at the home builders thanks to declining mortgage rates. Kind of a Hail Mary play, if you ask me. You can maybe buy a consumer packaged goods company that's doing okay. However, the strongest of these have a lot of business in China. Over the last 24 hours, the trade tensions have ratcheted up so much that you got to wonder if they'll even bother to hold the talks tomorrow. So if you're the quarterback, what do? I think you just try to protect the football right now. Don't do anything outrageous. Don't try anything fancy. And wait for a better moment when it no longer feels like China's in the balance. Or at least when next week's upcoming tariff hikes have been baked into the average. I don't think we're there yet. Bottom line, I can't fault the Commerce Department for cracking down on Chinese companies that enable some horrific human rights violations, but they did kind of pick a worst possible time to do it, right before the big trade talks. So I think you need to be very careful as this market readjusts and recalibrates its expectations. You don't want to throw a pick-six interception, and you don't want to be sacked for a loss deep in your own territory. Let's go to Steve in Texas. Steve!
Hey, Jim. How are you?
I am good, Steve. How about you?
Unbelievable.
Nice.
Jim, I've only been watching you since the late Bishop Haynes ordained you reverend,
wow.
And I just want to thank you for being such a positive influence on investors, especially young investors.
Oh, I love that. That's what I want to do, and we're having tough times, so we're going to get through them together. How can I help?
Well, my question is on tandem diabetes and the rather drastic upticks in the price targets. I took up a small position several months ago, and at that time, the price targets were, averaging in the low 70s. Then they suddenly jumped up into the mid 80s, and even though they've eased a bit as of late, they're still above 80. So are you a believer, given the way the
I am a believer. Now, remember, speculative stocks have been completely taken to the woodshed here. I think tandem diet be down $3.63. I think this is attractive level. You got to leave a little room. But Clearly this market hates speculation, and Tandem is a speculative stock. First, gold, real estate investment trusts, and utilities. The market is readjusting its expectations, so you need to tread carefully and protect the football. On Mad Money tonight, Domino's just delivered something its investors aren't used to digesting, an earnings miss. The stock took a hit early in the morning, but then it rallied. Is it a buying opportunity? I've got the CEO. Heading for a tough day for the averages, wondering what your next move should be. I'm going off the charts to find out what's next for this market, and could the breakup of another unbelievable industrial icon be coming? I'm talking to the CEO of Emerson Electric to find out options for the 129-year-old company with a fabulous dividend record. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.